Hi friends, welcome to Insurance Decoder. On our channel, you will find only insurance related videos. And in this video, I will tell you about the principles of insurance. Friends, whether you are a student or an insurance buyer or an insurance agent, you shall be aware about the principles of insurance. In this video, I will explain the principles of insurance in a very easy and lucid way. I will use real life examples to explain the principles. First principle of the insurance is the principle of utmost good faith. According to this principle, the person who is getting insurance shall willingly disclose all the required information in a complete and true knowledge. You shall not find any information asked by the insurance company. You shall correctly tell everything about your health, if you have any kind of disease, your past medical history, any medicines you are taking, etc. And you should also tell correctly about your health income. You should also tell about your family history, like if any of your parents or your siblings have suffered from any kind of disease, etc. And you should also correctly tell about your age. Generally, you have to produce any document which contains the date of birth. And you should also correctly tell about where you work, in which industry you work, and how risky is your job. Next principle is principle number 2, which is principle of insurable interest. According to this principle, you should have insurance only for the subject where you have the interest. That means if you lose those persons or things, you have direct loss. So for example, you can take insurance for your son, your wife and your parents, but you cannot take insurance for your neighbor's son or your friend. Losing your neighbor's son or your friend may have emotional loss to you, but it will not have any kind of financial loss to you. Similarly, you can take insurance for your car, your house or your property, but you cannot take insurance for your friend's car, house or property. Now, the principle number 3 of the insurance is the principle of indemnity. According to this principle, insurance is not made for making profit, but it is made for compensating you against the loss that has incurred to you. That means compensation paid cannot be more than the loss incurred. So a person earning rupees 5 lakh a year cannot take insurance plan of rupees 500 crores. Or you cannot take car insurance of rupees 10 lakh for a car pricing 5 lakh rupees. This is the reason insurance companies do not provide term insurance to an unemployed person or a housewife or a student. Next principle is principle of contribution. This principle is applicable when there are more than 2 insurers for the same underlying property or asset. In this case, the insurance company has the right to share the loss with other insurers. Now, suppose you have taken an insurance of rupees 10 lakh from one company and of rupees 10 lakh from another company. And in a fire incident, your total loss is rupees 10 lakh. Now you go to the insurance company number 1 and claim entire loss. The insurance company will pay you the compensation. However, now the insurance company number 1 will approach to the other insurer and ask for 5 lakh rupees because both the insurance companies had equal share in your property. This principle, however, does not apply for life insurance, wherein you can have multiple insurance, but still you have the right to claim insurance claims from all the insurance companies. Next principle is principle of subrogation. According to this principle, once the insured is paid for the losses, then the ownership right of such property shifted to the insurance. You cannot take the benefit from the damaged assets. For example, if your bike or car is stolen and the insurance company had paid you the compensation, thereafter you cannot have the ownership on the lost car or bike. Now after some time, if the insurance company finds that bike or car, it can sell them and you cannot make any claim from the insurance company because you have already been paid for the damage. Next principle is principle of loss minimization. According to this principle, you should put all your efforts to minimize the loss to the insured asset. For example, your car is stolen, then you should immediately call the police, call the insurance company and tell them about the loss. And if there is fire in your car, you should immediately call the fire brigade. Or if you have water or fire extinguisher, you should use them so that the loss can be minimized. You cannot simply sit and watch feeling that you have already get them insured and the insurance company will pay you the compensation for the damage. Next principle is principle of Causa Proxima or nearest cause. According to this principle, if your loss has caused because of two things, then the nearest cause should be taken into consideration to decide the liability of the insurance. For example, there is a ship and the rat have made hole in it, because of which water entered into the ship and the goods loaded in the ship have damaged. In this case, there are two causes of incidents. First is the rat and the second is seawater. Even though rats have made the hole in the ship, but the actual cause of damage was seawater. So here the nearest cause is damage due to seawater. So friends, these were the principles of insurance and I hope you have understood them clearly. If you have liked the video, please don't forget to smash the like button. Don't forget to give your valuable comments. And if you are not subscriber to our channel, please subscribe to our channel to watch insurance related videos in a very easy and lucid way. Thanks for watching the video and the time you have given. Keep watching the Insurance Decoder.